The market development has not been that great. Prices continue to go down, but hopefully, because you're watching this channel, you are less affected by this movement. Now, the question is, what should we do going forward? We have been betting on falling prices since the end of October. And that's not because we've got a crystal ball. It's because we were below the 44-day simple moving average, the line here in orange. I've backtested all kinds of moving averages from the 2-day all the way to the 200-day. And there are two moving averages that work the best. The 44-day simple moving average and the 125-day simple moving average. So on the y-axis, we see the annualized performance. On the x-axis, we see the duration of the moving average in days. I've made all kinds of analyses. How much do we make with the long? How much do we make with the short? What kind of leverage should we use? But especially if we want to be active with trading, the 44-day SMA works much better than just buying and holding Bitcoin. Crypto is still an asset class that's dominated by sentiment, that's dominated by the trends. If you bought and held Bitcoin during the time period, you would have gotten the return in white. But if you're trading according to the 44-day simple moving average, you bet on rising prices and on falling prices, you get that return in turquoise. And this is a logarithmic scale, right? So each of those horizontal lines represents a 10x. By the way, there's also a capital pool for the premium members of this channel if you just want to follow the 44-day simple moving average automatically. So that's down below, thebitcoinstrader.com. Now we are a bit in a dilemma right now because yes, we are below the 44-day simple moving average. We should still continue to bet on falling prices, but we are also very much extended away from that moving average. In other words, doesn't it make sense to just wait a bit longer until we get closer to the SMA? Because we'd still be bearish on Bitcoin, even if we were to go up by 15%, maybe even 20%. We could hit 100K in the Bitcoin price and still be pessimists based on that backtest. So wouldn't it make sense to just wait until the moving average comes down or until the price comes up and then enter the short position to then bet on falling prices? If we are overall bearish on the market, then maybe still we should pick a nice entry opportunity because volatility is now very high. Now, in order to answer this question, I've built a custom indicator, the extension from the moving average. How far are we below or above the current 44-day simple moving average? And how does the current extension away from the moving average compare historically speaking? So here's what I mean. At the bottom, we see the delta of the current price relative to the moving average. We cross the moving average whenever we are above 1. So have a look at this. We just crossed the moving average. We are also above 1. Here again, close to the crossing line at 1. Close to the moving average. So 1 is our baseline, and we can see how much historically do we go above and below that moving average. And are we currently really that aggressively sold off? Does it make sense to potentially wait? And so let's zoom out a little bit. We see here the end of 2018, right? When Bitcoin moved from 20K all the way down to 3.5K. We see the subsequent bull market over here. This was the COVID crash. And there seems to be some kind of a range, which is no surprise. Because over time, when the price doesn't move much, we tend to get closer and closer to the moving average again. An upper ceiling, except for extreme scenarios, seems to be somewhere around 1.3. So at 30% above the 44-day simple moving average, we might be short-term overbought. We have seen this twice, the current bull run, once when we hit 70K and once when we hit 100K. But we are now looking for the other direction, right? For the bottom. At what point in time might we actually turn around? When are we short-term oversold? And so let's have a look at exactly that floor. There is the absolute extreme scenario when we are in the middle of a bear market or when we crash very quickly as during COVID, and we've got our regular correction. The regular correction is roughly a third below the moving average. The massive crashes are around 45% below the moving average. If you're enjoying this video so far and you're getting some value out of it, then feel free to give this a like. It will help the channel grow. It will help spread the word. Thank you very much. And then most turnarounds tend to happen at around 20% below the moving average. And we're very close to that level again. We have turned around slightly earlier during this bull run. So since we hit 16K and then appreciated all the way up to above 120K, we've never seen that much of a correction as we experience right now. We tended to turn around already at 15% or so below the moving average. So we are selling off faster than we have seen within the last 2 years. The only times when we continue to sell off from the current level is when we really peaked out, when the current rally was over, when we entered a bear market. So that was in May of 2021 and that was in June of 2022. This was the FTX collapse over here. And so what does this mean on a broader time scale? If you are still bullish on crypto, then we have to turn around very, very quickly. The selling has to stop. If we go down to 75, maybe even 70K in the next weeks, then we go that much below the moving average, that it's pretty clear that we are back in a bear market. Things do not look that great. But what this also means in return is that maybe it's now quite dangerous to start betting on falling prices today. Yes, the overall sentiment looks very bearish. Things are going down. And yes, the backtest says that we should be betting on falling prices whenever we are below the moving average. But the extension from the moving average also tells us that there is a good chance that we get closer to the moving average again. Now, does this mean that the price goes up? Not necessarily, right? We might just go sideways for a while. And so probably it's best to just stay cautious because the long-term holders, they continue to sell and they are the cause why the price is going down. It seems to be a bit late to start shorting the market right now. It seems to be a bit late to sell everything right now. But there is an approach that's not as deterministic. We can just dollar cost average in the position. Because again, there's not just the 44-day simple moving average, there's also the 125-day that works well. And that's this line over here. We are also below that moving average. It also tells us to bet on falling prices. But if we take those trend following strategies seriously, we might rather be bearish and we might want to dollar cost average into a short position. So we don't bet 100% on falling prices now. We just add more and more exposure as we get closer to those moving averages so that we are properly hedged in case 2026 turns out to be a bearish year. And so that then also goes for things like the moving average trading vault, right? If you want to allocate towards this strategy, don't just put everything in today. Rather, allocate towards a position step by step so that in case we continue to crash very quickly from here because of the long-term holder selling, you're already starting to make money. But in case we do see the bounce and we get closer to the 44-day SMA again, you get better entry prices for the short. You get better entry prices to hedge against a potential collapse. So you become a bit more agnostic towards the short-term price movements just by dollar cost averaging in a position. That's true for buying Bitcoin, but that's also true for allocating towards trading strategies. Now, times like this don't feel great, but I actually like the volatility in crypto because it's very hard for Bitcoin to make another 5x when it's already at 100K. But if we now come crashing back down and we can hedge ourselves to a degree during that movement to the downside, and then we hit maybe 30K in Bitcoin, then a 5x is much more realistic. So the volatility is a potential opportunity if we simply don't get wrecked during the down movements. And so when times are tough, when the tide is going down, we see who's swimming naked, we see who's going bust, who's giving up, and we see the people that don't buy into the hype, that try to stay as realistic as possible. I got so many comments in the last weeks that I'm always bearish all the time, but I very much invite you to have a look at this channel and what has been published in 2023. Check out the macro videos at that time. And don't just do this with this channel over here, right? Also do this with other channels. Check what they said at the peak of prior bull runs and at the bottoms of prior bear markets. How well did your favorite influencer time the market? And the interesting thing is that there's simply recency bias, right? Very few people follow a channel over the long term. Most people just come and go. They just see how I'm betting on falling prices, especially of very risky altcoins. They call me a permanent bear, but they don't know what happened when prices were actually cheap. It's easy to always be bullish. It's easy to always promote crypto. It's easy to tell everybody that prices will go up because that's what most people want to hear, right? Most people want to get their bias confirmed. But I am playing the long game. I'm betting on the people that will stick around even during the bear market, that will then still have capital once prices are actually low. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. A link to Premium pops up here on the screen. See you next time. Cheers.